Okay, thank you. Then this is mock paper discussion for SL25-2 Strategic Finance and Management Accounting subject. I am Amila Sampath and I will be facilitator for the today discussion. Without taking time, let's move on to the discussion. But before that, I think as all of you know, this June 2026, this examination will be the first examination under the new syllabus. Basically, for strategic level, we can identify few considerable changes regarding the paper structure as well. Then for the previous syllabus, basically you had to analyze the case study, and based on that there was a separate question based on that case study. But under the new syllabus, when consider the paper structure for the strategic level, we don't have like that case study or the pre-scene analysis. Basically, we don't have like that pre-scene analysis. Mainly, you have to give answers for the 3 questions, and also under section B, out of 3, you can choose 2 questions. That means it is option. There is optional question that you can. It's like optional situation, and for the section A there is a mandatory case study, mini case study based question. That is important thing when considered with the previous syllabus. I hope all of you already know about that because now you are come exam එක ළඟටම ඇවිල්ලා තියෙන්නේ. Therefore definitely you should know about that paper structure change. You don't have pre-scene analysis for this examination, since this is the first examination under the new syllabus. And also when consider the paper structure, mainly there are 2 sections, section A and section B. Then for section A, it is like mini case study based question, and for the section B there are 3 questions. Then out of that you can choose 2 and then you can give answer for that. That's a basic or the common thing what I needed to mention before move on to the today discussion. Before move on to that, then I think CH Sri Lanka, they shared this paper with you before discussion, as well as they conducted mock examination as well. Before move on to that, then can I know what do you think about this mock paper? Because then this mock paper, it was prepared based on the CH Sri Lanka examination guideline and as well as to cover our syllabus. Then if you participated for that mock examination or otherwise, if you tried this paper, what do you think about the content? It is time manageable or what about that? Before we move on to the discussion, because important thing is the time. For strategic level, time is the most important thing, because as you know, you will have only 3 hours. Then within that 3 hours, you have to give answer for mainly 3 questions. One question is 50 marks allocated one, other 2 are 25 marks allocated 2 questions. Therefore, time management is the more important thing. How about your time management? If you tried this mock examination, mock paper, or otherwise if you participated for the mock examination, how about your time management? Did you complete this paper within the time frame, or how about that? Can I get quick feedback about that? Yes, I got one feedback. What do you think about others? Then, or otherwise, then if you this June examination, this 2026 June examination, if it is not your first attempt, that means previously you faced for the CFRM subject, did you able to complete that paper within that given 3 hours? Then can I get about the feedback about that as well? Because then there may be some students, those who pays for the CFRN subject from previous syllabus and come then reattempt under the new syllabus. Then what do you think about? Did you able to complete within the 3 hours your paper? Yes, I got one. Yes. Basically, most of the students then, I mean, consider the previous students paid back years. Most of the students paid back. They told me that yes, time it is can't manageable or the not sufficient. But thing is, if you can give answers based on the allocated marks as well as especially you need to think about the consider about the action verb here mentioned, then basically then end of the paper definitely you will get the action verb checklist. Then under the action verb checklist you can see එතන තියෙනවා මේ action verb එකෙන් මොකද්ද කරන්න තියෙන්නේ. If you will ask to calculate, then only thing you have to do the calculate. Most of the students they did this mistake. යාලා කරනවා මොකද්ද calculate, evaluate, analysis මේ ටික පටලව ගන්නවා. Ultimately what happened අර අනවශ්‍ය time එකක් you spend for the unnecessary thing. Therefore, first advice what I need to give for you regarding that time management is please especially think about that action verb. Whether it is estimate, whether it is evaluate, whether it is calculate or whatever. You have to think about that. Then හුඟක් අය කරන්නේ calculate කරන්න කිව්වම ඒකෙත් තව evaluation part එක එනවා. Then only if you examine asked to calculate, that's enough to calculate and give the assumptions what you use for that calculation. But if you examine asked to evaluate, then you have to do evaluations. Then if you examine asked to assess, then you have to assess that decision. Then based on the action verb, you have to do whatever the required things, but don't utilize unnecessary time for the or the extra time for the unnecessary thing. Okay, that's the first advice what I need to give regarding that time management. And also, please allocate the time for each question, and if you feel that you will exceed the time, please move on to the next one. Then at the end of the paper, if you will have the extra time, then you can come to that and the re-attempt. අන්තිමට මොකද්ද වෙන්නේ? එක ප්‍රශ්නයක ඉඳලා අන්තිමට අනිත් ප්‍රශ්න ටික සේරම යනවා. හරිද? ඒ නිසා that's one is also the more important regarding time management, because when considered strategic level paper, definitely it is not only for the this strategic finance and management accounting subject, for other subject as well, then definitely you may have this problem, time management thing. Okay, and also one feedback, or not feedback, message what I got is selection time is a problem. I hope all of you know about that. You will get additional 15 minutes for reading and planning. Then that 15 minutes definitely you can allocate for that selection time, no? Because other than the 3 hours, you will get that 15 minutes as reading and planning time period. Then you can utilize that time to select the questions. Okay, then that's another important thing. Then during that 15 minutes, then try to get understand about the available questions, and please select the 2 questions what you can attempt more confidently. වැදගත්ම දේ ඒක මොකද අර ප්‍රශ්න 3ක් තියෙනවා, then from that you have to select one, not you have to select 2 questions නේ. එතකොට 2 questions වලින් you have to select වාට හොඳටම attempt කරන්න පුළුවන් කියලා. අර ප්‍රශ්නේ කියවුවාම then you can just get idea about the content of that questions and the examiner requirement, no? Then based on that you can select the වාට හොඳටම පුළුවන් ප්‍රශ්නේ තෝරගන්න. අන්න ඒක ඊළඟට වැදගත්ම දේ. Then regarding that selection time, I think that 15 minutes is enough to select the 2 questions, okay, and get the overall understanding about the paper as well. Yes. Not theoretical, I think. Another feedback what I got is I was not able to complete all questions. Mock exam, there was a more theoretical question evaluate and prepare summaries. Basically, for the strategic level, most important thing is you have to think as a CFO, not as a management accountant, not as assistant manager, not as a manager. You have to think as a CFO. Then බලන්න පළවෙනි questions එකේම කියනවා CFO කෙනෙක් විදිහට you have to think. So CFO කෙනෙක් විදිහට you don't have to do any calculations, okay? Then based on the available calculations or the whatever the available information, you have to take decision. You have to give that CFO perspective, the CFO perspective about that decision to the board of directors or to the CEO. Then it is not about the theoretical things, it is about the analysis or the evaluation of decisions, okay? That's another important thing. Here you will have to think as a CEO, CFO, okay? Then basically for hammer questions you will not get the calculations එන එකක් නැහැ. Calculations කරන්න ඉන්නේ නැහැ. හරිද? You are CFO කෙනෙක් විදිහට think කරන්න ඕන. හරි. Okay, then now time is enough for that initial discussion. Now we can move on to the mock paper discussion, and also one message. There are questions related to the investment appraisal. However, I couldn't find the corresponding lesson in the study text. Can we expect investment appraisal questions to be included in the final examination as well? Then as a CFO, then as I told you, then here you have to think as a CFO. Then in that case, then you have to evaluate or you have to give some kind of the suggestions based on the whatever things you studied previously. Syllabus එකටම විතරක් මෙතන සමහර දේවල් then syllabus එකේ තියෙන දේවල් තමයි තියෙන්නේ. හැබැයි syllabus එකේ විතරන්නේ වා management accounting වල මේ තියෙන්නේ strategic finance and management accounting. එතකොට management accounting වල කලින් ඉගෙන ගත්ත theories තියෙනවා, කලින් ඉගෙන ගත්ත concept තියෙනවා. ඒවා සමහරවිට මෙතන apply කරන්න වෙන්න පුළුවන්. And for the NPV, I think we have corresponding for that as well. Whatever කලින් ඉගෙන ගත්ත concept සමහරට apply කරන්න වෙනවා පුළුවන්. මොකද in the real world ඔයා CFO කෙනෙක් විදිහට ගියාට පස්සේ ඔයාට ඉගෙන ගත්ත සේරම apply කරන්න වෙනවා. හරිද? ඒ නිසා අපිට අර syllabus එකේ තියෙන concept ඇතුලේ අපිට strategic decision making තියෙනවා. ඒත් strategic decision making යටතේ සමහරවට NPV base කරගෙන decision එකක් ගන්න වෙන්න පුළුවන්. හරිද? ඒ නිසා ඒ concept කලින් ඉගෙන ගත්ත concept සමහර වෙලාවට ඔයාට apply කරන්න වෙන්න පුළුවන් අපේ syllabus එක ඇතුලේ. අපේ paper එක ඇතුලේ සහ decision making process, practical decision making process වල අපිට ඒක කොහොමත් කරන්න වෙනවා. Okay, let's move on to the mock paper discussion. Yes, then from the students, definitely whatever the knowledge you will gain from the previous syllabus, definitely you can apply for this one as well, because some of the parts in the previous syllabus, then here we can't see those within this syllabus. Therefore, whatever things you learn from the previous syllabus, yes, definitely you can apply for this examination as well. Okay. Without taking time, let's move on to the mock paper discussion. Then let's start from the question number 1. It is mini case study based question. Then first let's go through that mini case study. then we can move on to the relevant requirement. But important thing is, then before you will read the questions, I think important thing is to first read the requirements. Then you know these are the requirements. Then while you are reading the content or the available information of that question, definitely what තේරෙනවා මෙන්න මේ මේකේ ඉන්නේ මෙතෙන්ට මේකේ ඉන්නේ මෙතෙන්ට කියන එක, then you can get understand about that. Therefore before you will read the available information or the content of that question, it is better to read the requirements, and then based on that ඔයාට ඒතකොට link කර ගන්න පුළුවන් තියෙන content එක. Okay, first let's see what are the requirements. Then basically for this question we have four requirements. First one is estimate the equity value of PLL using the appropriate valuation method and assess whether the proposed acquisition would be financially and operationally justifiable based on the expected acquisition consideration of 900 million and other operational synergies. Clearly show all calculation assumptions and supporting workings. Then basically here we have to do equity valuation. It is a estimate equity value, and also you have to assess whether the proposed acquisition of that 900 million it is justifiable in terms of financially as well as operationally. අපිටන CF කෙනෙක් විදිහට හිතද්දී මේ number එකෙන් බලාගෙන number එකෙන්ම විතරක් නෙමෙයි, then you have to think අර wide range එකකින් හිතන්න පුළුවන් වෙන්න ඕන. එතකොට අපි මෙතන proposed acquisition and financially as well as operationally we have to say whether it is justifiable or not. That's the first requirement. Second requirement is prepare a high level summary note for the board explaining how the finance function can support successful implementation of proposed ERP system and contribute to technology driven operation development within the NTB. It is like you have to give the high level summary explaining the whether they have, I think whether we don't know whether we have that ERP system regarding information, then requirement is to prepare the high level summary. Then C, evaluate the importance of the integrating sustainability consideration into strategic investment appraisal and long-term business planning of NTP. Sustainability, as all of you know, currently it is a most emerging trend in this 21st century, sustainability. Then here you have to evaluate the importance of the integrating sustainability consideration into the strategic investment appraisal as well as with the long-term business planning of NTP. Then it is a 5 marks allocated question, just you have to evaluate little bit as a high level summary, you have to evaluate the importance of that. Then part D, prepare evaluation of financial feasibility of proposed automated QC investment project, clearly show all calculation assumptions and supporting workings. That's about the requirement of the question number 1. Then let's see, or let's analyze the mini case study about North Terminal PLC. Then North Terminal PLC is the listed port terminal company which is currently operating the Colombo port. Over the last 25 years, it has operated in excellent condition with higher profitability and lower GD. However, the commencement of the operations by Container Terminal PLC (CTP) has had a direct impact on the operations of NTP. Then basically this case study is about what? About North Terminal PLC. It is about the NTP. Because of competitive pressure of the operation, NTP is currently looking for new strategies, including the investment of new automated Q crane. Then here QC, it is like the machine or the type of machine that is used for loading and unloading containers from ship. It's a basically machine. With the intention of improving operational efficiency, enabling faster loading and unloading cycle, with increase in per hour movements, improving cost efficiency and especially to reduce the energy usage and carbon intensity. Basically, they are looking of investment of new automated machines, QC. Additionally, the board of NTP is currently evaluating the acquisition of other than that investment, they are evaluating of acquisition of Port Logistics Ltd, which is the interterminal trucking company operating in Colombo Port. Basically, they are currently looking for the two strategies. One is for the QC, investment of the new automated machines, and another one is of acquisition of another company. Then we have information for that proposed investment for the automated QC. NTP has decided to purchase 4 new automated QC crane machines, which require initial investment of 400 million. The economic useful life of this project is 12 years, and the estimated residual value at the end of the useful life is 10 million. Then that's basically about their information regarding their initial investment and about the residual value. Then these details, these are important for our NPV calculation or the project financial feasibility analysis, because our first requirement is to analyze the feasibility of that project. Then working capital assumptions. Working capital of 80 million is required at the start of the project, and working capital increases by 15 million at the beginning of each year from year 1 to 10. Remains constant thereafter and is fully recovered at the end of the year 12. That's about the working capital assumption. Then basically at the initial point, at the starting point, we need to incur 80 million as initial working capital, and thereafter for each year we can expect 50 million increment regarding the working capital up to 10th year. Then for the 11th and 12th year, then we don't expect any increment, and at the end of the year 12, then we can recover that full working capital investment. Then we have information about the operating cash flows of that investment. Then here basically, then as a CFO, then as a CFO, that person, CFO, then has to take some decision. No, then when he takes some decision, then palleha kattiya calculate the information. Then for palleha kattiya means the manager or the assistant manager or the management accountant. Then normally they give that relevant calculation and information to CFO, and then based on that information CFO normally take decision. That's a normal procedure. හැබැයි එහෙම information ගන්නදී වඩා CFO ගේ ඔළුවේ තියෙන්න ඕන මෙතන මේ use කරලා තියෙන දේ හරිද වැරදිද. That's important thing, because manager or assistant manager or management accountant may do some wrong calculations. In that case, CFO without further evaluating whatever the manager or the assistant manager provided information, if the CFO take decision without further evaluating or the further reviewing, එතකොට ultimately එක වැරදි decision එකකට හේතුවක් වෙන්න පුළුවන්, maybe a reason for the wrong decision. ඒ නිසා CFO ගේ ඔළුවේ තියෙන්න ඕන මේ use කරන informations ගත්තම නැත්නම් calculate කරපු විදිය හරිද වැරදිද ඒක පොඩ්ඩක් review කරන්න ඕන. Then that from this part actually it is trying to check that or the evaluate about that knowledge, especially regarding the real growth and the nominal growth. Okay, so හිතන්න CFO විදියට මට එනවා information. හිතන්න මම CFO කෙනෙක්, if then I am getting information from my manager regarding the some cash flow calculation. So එයා හිතන්නේ ආයතන use කරලා තියෙන growth rate එක real growth rate එක use කරලා තියෙන්නේ without considering the nominal growth rate. That means without considering the inflation. Then it may be wrong, because for our calculation, in the case if we have the real interest rate, then for the getting the present value of the everything, then it is okay to use the real cash flows. But in the case if we don't have the real discount rate or the real interest rate, then basically we have to go with the nominal cash flows, and based on that we have to do calculation regarding that NPV. Then this part, it is trying to check in about the knowledge of that. Basically, real operating cash flows before tax are expected to grow at 5% per annum. Then real operating cash flows. Then what is the difference between real operating cash flows and nominal operating cash flows? Then what is the difference? Then basically real cash flows is without adjusting the inflation. But nominal cash flows, these are adjusted with the inflation. Then basically for our evaluations, then for our calculation, I think most of the cases we need to use that what? Nominal cash flows. So, but basically we have information about the growth rate of the real operating cash flows. No? Then we have the growth rate of the real operating cash flows as 5% for that period. After the 8th year and 5% per annum after the 8th year, and general inflation is forecasted as 6% per annum. Other than that, they forecasted inflation as 6% for that period. Nominal operating cash flows for years 1 to 8 are as follows. Then here we have nominal cash flows. First we have growth rate for the real cash flows, but we have information regarding the first year to 8th year cash flows. Then these are nominal cash flows. We have nominal cash flows. Basically we have from year 1 to 8 nominal cash flows. Important thing is for our calculation, I don't know, based on the available information we have to decide, but I think for this one we need to know about the nominal cash flows after 8 years, because then the useful lifetime of this project, it is 12. Basically we have 1 to 8 nominal cash flows. After 8 to 12, definitely we need to know the nominal cash flows. But thing is here we don't have nominal growth rate. Then ඔයාලා නිකන් මේක සිම්පල් දෙයක් විදිහට හිතෙන්න පුළුවන්. හැබැයි මේක ඔයාලට එකපාරම ඔලුවට එන්නේ නැහැ දැන්. මේක සිම්පල් concept එකක්. හරිද? හැබැයි සිම්පල් concept එකක් වුණාට then this is a simple concept, but that your thinking pattern is important to grab that point. මේක ප්‍රශ්නේ කියලා තියෙන එක කෙලින්ම කියලා නෑනේ. මෙහෙම කැල් කරලා මෙහෙම ගන්න ඕනේ කියලා. Basically after 8 years we need the nominal cash flows, but thing is here we have the real inflation, real cash flow growth. We need what? We need nominal growth rate. We need nominal growth rate. Then how can we get that one? How can we get the nominal growth rate? Can someone tell? How can we get the nominal growth rate? It's a simple concept. Simple concept එකක් වුණත් මේ ප්‍රශ්නය ඇතුලේ එක හංගලා තියෙන්නේ. That's the important thing for our calculation. So CFO කෙනෙක් විදිහට හිතද්දී just you have to review about that as well. ඔයාගේ manager the assistant manager the එයා cal කරලා තියෙන විදිහ whether it is correct or not, then CFO can ask from the manager or assistant manager, then how did you get that operating cash flows, then what is the growth rate, or the otherwise then how did you get the growth rate from the real to nominal, then like that can then ask no. ඒතොර ඒකට CFO උනත් ඒක ඔළුවේ තියෙන්න ඕන. මෙන්න මෙහෙම දෙයක් තියෙනවා කියන එක. Yes, basically nominal growth rate we can get 1 plus real growth rate into 1 plus inflation minus 1. Using this simple formula, we can get what? We can get nominal growth rate. Then for this question actually, simply we can calculate nominal growth rate 1 plus real rate. Then here one plus real rate of 0.05 into inflation of 1 plus 0.06 minus 1. Then after resolving this, then basically we can get nominal growth rate as 11.3. Then for this question we can get nominal growth rate as 11.3. Actually that is the main thing, trying to check in from this part. මොකද ඒ වගේ දේවලුත් වැදගත් වෙනවා CFO කෙනෙක් විදිහට හිතද්දී. Okay. That is about that operating cash flows. Then corporate income tax is level at 30% and payable in the same year. Then for the income tax, if we consider as a cash outflow, then we are paying it the same year. Then next part is the most important. Okay, then basically for my financial feasibility calculation, definitely we need to go with NPV. Then for the fourth requirement, yes, real rate means the growth rate, real growth rate. Then next, under the additional information, we have some information regarding the cost of debt, cost of equity, like that. Then for the fourth requirement, definitely we need to do that financial feasibility analysis based on the NPV. That's a only way based on the available information. Then to get to calculate the NPV, we need to get the present value of the cash flows. Then based on that only we can do that. We can do that based on that. Important thing is, to get the present value of the cash flows, we need to know the discount rate. Discount rate. We need to know the discount rate for this project. Then if did you try to attend for these questions, what is the discount rate you use for the calculation? Then this additional information for that, to decide in that. This additional information for decide into that. Then if you try to attend for this one, then what is the discount rate? I need number for this one. Okay, I got few numbers. Then let's see whether those are correct. Let's see. Most of the students, they mention it as a WACC. Okay. Any one of you don't have any different perspective regarding the discount rate for the purpose of getting the NPV for this project? මුකුත්ම නිකන් just anyone කාඩව නැද any different perspective එකක් මම discount rate එක ගැන yes I got one answer with that different perspective what I expected. Then let's see. Oh yes, we have the another perspective as well. And I think most of the students, you mentioned it as WACC, but you didn't mention it as a WACC of the company or the WACC of the project. Then one answer I got. WACC for fund for this project or the WACC of this project. Basically, this for this project. That is a expected answer. Then for this project, then you can see. Then let's see the available information. Then in NTP's current capital structure is as below. We have current capital structure, market value of the equity 8,400 million. Then market value of the debt 1,600. We have the market value. Then existing pre-tax cost of debt 9.5. That's the existing pre-tax cost of debt 9.5. Current levered equity beta 0.8. Risk-free rate 10%. Market risk premium 6%. And important wording of this question is what? NTP is planning to obtain a new loan special to 100% finance the proposed investment. Then NTB is planning to obtain a new loan specially to 100% finance the proposed investment of this 400 million purchasing. Following the recent discussion with the International Finance Corporation IFC, the institution has agreed to provide financing at an annual interest rate of 7.5. Then if we go with this project, we can borrow money from IFC, especially for the purpose of purchasing these machines at the rate of 7.5. At the rate of 7.5. Basically, we have option to 100% financing from IFC. Basically, answers you told both are correct. Then we can justify the both. Then theoretically, I think in our initial levels, in business level as well as corporate level, theoretically we say what? Normally we say it, if we have the information regarding the financing option of that project, then we can use that rate or the that interest rate or the whatever as a discounting factor for the discounting rate for that project for the purpose of getting NPV. අපි එහෙමනේ කිව්වේ. අර project එකටම අපි special finance එක අපි දන්නවා නම් then we can use that as a discounting factor to get the present value. Then we learn about it as a theory. අපි තා පොඩ්ඩක් ඉස්සරහට ගියොත්. Then especially for this project, then as a CFO, then you have to think like that, okay? Then theoretically we learn that, okay, that's okay. But then regarding this investment, it is about the QC, then QC is the main part of the operation. Basically, operating cash flows from this new investment, these are directly impacted from the operational risks of that business. අර අපි මෙතන investment එක කියන්නේ QC, that is a major part, it's a major machine of the port terminal company. එතන port terminal company එකේ තියෙන main එක ඔයාලා දැකලා ඇති ඔය වරායේ තියෙන අර උස නැව් වලින් බඩු ගන්න මේව කරන machine එක. ඒතකොට ඒක main part එක. එතකොට ඒක operational cash flows එක directly link වෙනවා. ඒතකොට operational risks එකක් තියෙනවා. then we have to think about that operational risks as well. Then if we use only 7.5 as our discounting factor, yes, that is correct. Then if you use the 7.5, it is not wrong, okay? Then you can justify. Then that is another important thing. Then for your examination, then for the for this requirement as well, it is specially mentioned what? Clearly show all calculation assumptions and supporting workings. If you justified why you used 7.5 as a discount factor, yes, definitely you may get marks for that, okay? Because 7.5, using the 7.5 is not wrong. ඒක වැරදි කියලා කියන්නේ ඒක හරි, because theoretically it is correct. Then if you have the option to 100% finance from the IFC at the 7.5, then we can use this for the purpose of discounting that cash flows. But you have to think beyond that. Then operating cash flows of that project, it is directly impacted from the operational risks of that business. Then we have to consider about that as well. And also the equity holders la innawa. එතකොට අර operational risks එකත් එක්ක directly impact වෙන්නේ operational equity holders ලට. Therefore, the most suitable discount rate for this project is the WACC of this project. Then basically we have to consider the cost of equity as well with that 7.5. Basically based on the CAPM, we can calculate the cost of equity for that company. Plus we can calculate the WACC considering that 7.5 as well. Then you can say the reason why did you use that WACC of the project. You can say yes, 7.5 we can use as a cost of the debt. Then currently existing one is 9.5, that's okay. But for this project we can get less than that, no? Then currently we got a loan from somewhere in the local bank at the 9.5, that's okay. But for this project we can get it at 7.5, lower than the normal rate. Therefore we can use the 7.5 as the cost of debt for this project. And cost of equity we can calculate based on the capital. We can calculate based on the capital. And ultimately we can get the WACC and then we can use that for the purpose of discounting. This one also correct, but definitely you need to justify your answer. Why did you use that WACC of the project? Then if we use the 7.5, yes, you can justify that as well, because theoretically අර අපි දන්න විදියට ඒ project එකට special financing option එකක් තියෙනවා. Yes, that's okay to use that as well for our discounting purpose. Then you can justify that as well. Okay, so මේක තියෙන්නේ අන්න එතෙන්ට you have to think beyond. හරි, ඔයා හිතනවා හරි 7.5 ඕකේ use කරන්න පුළුවන්. හරි, වැරදි නෑ. හැබැයි you can think beyond that. අපි 7.5 ගත්තොත් එතන capture වෙන්නේ අර අලුතෙන් ගන්න loan එකේ risks එක විතරයි. It is only if we use the 7.5, it is only captured the risks of that loan as well as the risks regarding that new financing option. Not about the operational cash flows, the operational risks of that business. මෙතන QC use කරන operational මේකට. ඒ නිසා අපි අර equity holders ලගේ perspective again, then we have to use it is better to use better to use the back of the project. හරිද? ඒතර ඒ perspective එකෙන් තමයි additional information එක තියෙන්නේ. හරිද? ඒතර ප්‍රශ්නයක් ඇහුව නේද? NPV syllabus එකේ නෑ ඇයි අහලා තියෙන්නේ කියලා. Then the purpose of including that is to test in about those concepts. That's not about the calculation, that's about your thinking, analytical thinking. You have to think beyond your normal area, or we can say it as අපි කියන්නේ අර normal දකින්න විතර පොඩ්ඩයි hard ඉස්සරහට හිතන්න ඕන. That's important for strategic level, not only for this subject as well as for the subject. That thinking pattern is the more important. Okay, then purpose of including that additional information is that for the purpose of the getting NPV, we have to discount rate. Then from these details, then we can decide about that. Okay, that's about the new investment. Then acquisition of Port Logistics Private Limited. We have information for acquisition of Port Logistics information. As part of the improving the operational efficiency of the NTP, the board is currently evaluating the acquisition of Port Logistics Limited. Port PLL operates within the Colombo Port as a lead in interterminal trucking and container transfer company, facilitating the movement of container between terminals, yard, depots and logistic facilities. The company owns a plethora of specialized port vehicle and provide logistic coordination service to shipping lines and terminal operators. Then basically this PLL, Port Logistic Company, they are providing interterminal trucking service between the terminals. Then basically in reality, mainly in Colombo port, there are 4 terminal company. Then there is separate companies for the purpose of moving containers between each of these terminals. Then we call this as interterminal trucking company. Then PLL is like that company. So යාලා කරන්නේ අර between terminal අතර මේවා movement කරන එකක් තමයි කරන්නේ. Then the NTP plan is to acquire that company. What do you think about that? I think here you have to access about that as well. That operational and the financial synergies with acquiring this new company. Then basically, then if NTP can acquire the PLL, definitely they can experience operational synergies, because it is like they acquire the supply chain, part of the supply chain of the terminal company, because it is basically interterminal trucking company is a supplier for the terminal company. The supply chain එකේ කැලලක් acquire කරා වගේ තමයි වෙන්නේ. හරිද? Let's see the available details. NTP believes that acquiring PLL would enable the company to improve vessel turnaround time, optimize yard capacity utilization, reduce container transfer delays and strengthen its position within the integrated port logistic value chain. This is special mention about the operational synergies. The board of the NTP has requested the valuation of PLLA using the appropriate approach to assess whether the target acquisition cost is reasonable or not. Then based on the requirement A, the target acquisition is how much? It is 900 million. It is 900 million. හරිද 900 million තියෙන්නේ. Then board of the NTP, they are requested to assess whether that target price is reasonable or not. The following information related to the PLL has been provided. Then basically we have information regarding the PLL. First we have the revenue for the financial year ended 31st March 2026 amounted 450 million. Then still I am creating the available information. Okay, then for my explanation purpose, I am linking that those available details with the requirement, and I am trying to give explanation of some of the hidden information with available details, and the trying to link those with the requirement. Okay, then still I am not starting the ප්‍රශ්න ඩිස්කස් කරන්න කියන්නේ ප්‍රශ්න හදන පාර්ට් එකට ආවිල්ලා නැහැ. still I am discussing the available information. මම මේ information ටික link කරන එක කරන්නේ with linking with the requirement as well as with hidden information. First point, revenue for the financial year ended 31st March 2026 amounted to 450 million. We have revenue figure. The revenue is expected to grow by 12% annually for the next 3 years due to rise in throughput volumes and increased outsourcing of container trans operation. Thereafter, revenue growth is expected to stabilize at 5% per annum perpetuity. Basically, revenue they are expecting 12% annual for the next 3 years, and hereafter it has a 5% for the perpetuity. PLL currently maintain an EBITDA margin of 18% and is expected to maintain it for the next 3 years. Then for the next 3 years, they are expecting to maintain it as 18%. And anticipated operational efficiencies and plate optimization initiatives are expected to gradually improve the EBIT margin to 21% by year 4, after which it is expected to remain stable. Basically, they are expecting 18% as the EBIT margin for the first 3 years, and hereafter they expect it as 21% for the perpetuity. Depreciation is expected to remain at 6% of the annual revenue. Capital expenditure required for plate replacement and expansion is expected to amount to 8% of the revenue during the first 3 years and 6% revenue after third year. Net working capital is currently maintained at 10% of annual revenue. Additional working capital investment will be required in line with future revenue growth. Basically, their working capital requirement is a 10% from revenue, and the additional working capital it is aligned with the growth of revenue. Then basically, these details are regarding that valuation. No? Then what do you think? Then we have the other additional information as well. Then we have the observed equity beta of the listed comparable logistic company is 1.40. The comparable company maintains a debt to equity ratio of 50-50 based on the market values. The board of NTP expects PL to maintain target capital structure of 40 debt, 60 equity. PLL currently has outstanding long-term bank borrowing with a pre-tax borrowing cost of 12%. And summary of financial position of PLL as of 31st March 2026 is as below. Cash and cash equivalent 50 million and debt 40 million. Then our first requirement is what? Then first requirement is to estimate the equity value of the PLL using the appropriate valuation method and assess whether acquisition is financially and operationally this justifiable or not. Then first in here you need to decide what is the appropriate valuation method for this question. Then first you have to decide the appropriate valuation method. Then as you think, what is the most appropriate valuation method that we can use for the purpose of estimating the equity value of this company? What is the most suitable one? Then basically, what is the most suitable one? Then based on the available information, what is the most suitable valuation method that we can use? Yes, cash flow based, basically pre-cash flow valuation. We can use the pre-cash flow based on the pre-cash flow valuation, then we can get the equity value of the company. Then basically, how can we get the equity value? Then for the purpose of getting equity value, first we need to calculate what? First, we need to get the pre-cash flow to the firm. Then based on the pre-cash flow to the firm, we can get the enterprise value. Then after adjusting some figures into the enterprise value, then we can get the equity value. No? Then basically, first we need to get the each year pre-cash flow. Based on that, we need to get the present value. then we can get the enterprise value. Important thing is how can we get the free cash flow to the firm. Then there are two concepts, free cash flow to the firm and free cash flow to the equity. Then basically for this one we need to go with the free cash flow to the firm. Then how can we get the free cash flow to the firm? Any idea? How can we get the free cash flow to the firm? How can we calculate the free cash flow to the firm? කොහොමද ගන්න free cash flow to the firm? That's a major thing, that is a major part of the that valuation, okay, getting the free cash flow to the firm. Yes, we need to start from EBIT. Actually we can start from NOPAT. Technically we call it as a NOPAT, net operating profit after tax. Okay, net operating profit after tax. Then how can we get the net operating profit after tax? NOPAT. NOPAT we can get EBIT into 1 minus T. Then we can get what? NOPAT. Net operating we can make a net operating profit after tax. Basically we can get it EBIT into 1 minus T. Then for that NOPAT we need to add depreciation or then generally we need to add back non-cash items. Non-cash items which are included in EBIT. EBIT එක ඇතුලේ තියෙන when අපේ තියෙන non-cash items තියෙනවා අපි deduct කරමු. Then we need to add back those. Then basically what are the main examples that we can identify as a non-cash items? What are the main items we can get as a non-cash? What are the main items that we can get as a non-cash? Yes, main item is a depreciation, then mainly depreciation and as well as amortization. Depreciation and amortization we can add back. Then other than that, here we need to adjust what? For the purpose of getting the free cash flow to the firm, other than the non-cash item, we need to adjust what? Yes, capex. Capex investment, we need to deduct it. Capex, as well as here we need to adjust plus or minus what? That's another important thing that we need to adjust here. Other than the capex, yes, working capital movements. Working capital movements, here we need to adjust. It may be plus or minus. Working capital movement. Then we can get what? Free cash flow to the firm. Then we can get free cash flow to the firm. Then these details are for that. For the purpose of getting what? For the purpose of getting these additional information. For the purpose of getting free cash flow to the firm. Then based on that, then we can continue our valuation. Okay. And another important thing is then here we have information up to 4th year. No? Then after that, then for the revenue as well, it is mentioned 5% growth in perpetuity. Then in that case, we need to calculate a special figure called what? Then after 4th year, basically we don't have any information to get the free cash flow to the firm. Yes, we need to calculate what? Terminal value. Because after 4th year we don't have any information. Then for revenue as well, we assume 5% growth for the perpetuity. Therefore, we don't have any other information. We need to get the terminal value. Then terminal value is the present value of the future all cash flows until the perpetuity. Then thing is, how can we get the terminal value? Basically, then for this example, we have only information up to 4th year. Then free cash flow to the firm of 5th year. How can you get? Then for this one, we have only information up to 4th year. Therefore, free cash flow to the firm of 5th year. For the next immediate year, divide by what? How can you get? We can divide this by only discount rate minus R minus G. Then basically free cash flow to the firm of 5th year. Then how can you get the 5th year free cash flow? Free cash flow to the firm of 4th year into 1 plus G. Then we can divide it by R minus G. Then using that, simply we can get what? Terminal value. That one also here we need to calculate. Okay, that one also here we need to calculate terminal value. Then these additional information for the purpose of getting the free cash flow to the firm as well as the terminal value. Important thing is, then based on the free cash flow to the firm as well as terminal value, we need to get the enterprise value. We need to get the enterprise value. Basically, present value of the all future cash flows we can say as the enterprise value of that business. Enterprise value of that business. To get the enterprise value, we need to discount these cash flows. Thing is, here also we need to discuss what is the discount rate. Then next additional information is for that. Basically, as we discussed, we have the similar listed comparable company beta 1.40, but it is a similar comparable company beta. Here we need to know calculate the cost of equity for this company. Then basically WACC. Then here R mean we need to know the WACC of the what? WACC of the PLL. We need to know the WACC of the PLL. We need to know the WACC of the PLL. Thing is, then to get the WACC of the PLL, we don't have cost of equity, but here we have information to get the cost of equity based on the available information. Basically, we have risk-free rate as 10% and the market risk premium as 6%. Calling part then we can use the same information, but thing is here we need to we have to think about the beta factor, because we have the beta for the similar listed company. Then we need to convert this beta for PLL. PLL to make a convert karanna. Then how can we do that? Then first we need to uncheer this. Basically for the similar listed company we have 1.40 as a beta. We need to uncheer this and we need to get the geared beta for the PLL. Then let's do that calculation. Still I am discussing the available information. Okay, then based on that we can get the beta and then we can continue the calculation, and based on that we can get the present value of these cash flows. Then present value of these cash flows we call as enterprise value. We call it as what? Enterprise value. But our examiner requirement is what? Getting equity value. Basically the equity value of the company. Then this enterprise value, then what is the simple meaning of the enterprise value? Enterprise value what is the simple meaning of the enterprise value? Do you have any idea about the difference between the enterprise value and the equity value? Any answer? Getting the way of getting that is correct. I am asking the mainly in theoretically what is the difference between the enterprise value and equity value? Any idea? I am asking not way of calculating. Then in terms of definition, how can we identify the difference between the enterprise value and the equity value? Yes, I got one correct answer. Then enterprise value, it is represent the value of the total business, then it is for both, that value is for both, this value is for both equity holders as well as for debt holders. Then enterprise value, it is for both shareholders, it is the value of both shareholders and the debt holders, but equity value, it is represent the only value of equity holders. Then basically, then NTP planning to acquire the PLL now. Then PLL for the purpose of acquiring PLL, definitely they have to purchase the shares of the PLL. So that equity holders like value. Then we have to think, we have to evaluate for the purpose of deciding our consideration. Then here the main difference between the enterprise value and the equity value, then enterprise value is for both equity holders and debt holders. It is a value of entire business, but equity value is the value of only equity holders. That difference. Okay, and how can we get the equity value from the enterprise value? That is an important thing. Then based on the enterprise value, we need to get the equity value. Then how can you get that one? How can you get the equity value? Basically, to enterprise value we can add cash minus debt, plus cash minus debt, plus cash minus debt, we can get what? Equity value. That is the way of getting equity value. Then for this question as well, we have that such information, we have cash and cash equivalents as well as debt. Then based on that we can derive the equity value for this business. Okay, then those details are for the purpose of getting that getting the equity value. Then next one is, it is a decision making related thing, implementation of the new ERP. I think our second requirement link with that information. Basically, and one thing, then this net difference of this we call as net debt. Okay, net debt, cash plus cash minus debt, we call it as net debt. Okay, yeah, then implementation of new ERP, that it is directly linked with our second requirement. It is prepare that high level summary to the board regarding the implementation of ERP. Then NTP currently operates using the several independent operational and financial systems that have limited integration between departments. As the business has expanded, management has experienced difficulties in onboarding timely and accurate operational and financial information for decision making purposes. Accordingly, NTP is planning to invest in the new enterprise resource planning system. The proposed ERP is also expected to support the future integration of PLL following the proposed acquisition. However, the board is concerned about the risks and challenges associated with implementing the large scale of ERP system, particularly in relation to operational continuity, employee adoption, cyber security, implementation cost and system integration. Then basically management, they has issue with that. No, they have issue with the operational continuity, employee adoption, that's about the change management, cyber security, implementation cost as well as the system integration. Basically, they have issue with about those. An important sentence of this question is the last sentence. What is that? The CFO has been requested to advise the board on these matters. Then at the beginning, as I told you, then for the strategic level, you have to think as not manager, not assistant manager, not management accountant. You need to think as whom? CFO, top level, okay. Basically for the answers as well, you need to give thinking you as a CFO. Or CFO කෙනෙක් විදිහට හිතලා තමයි උත්තර දෙන්න ඕන. හරිද? Okay, then let's start from our first requirement. Estimating the equity value of the proposed acquisition, and here we need to justify financially and operationally whether it is okay or not. Okay, let's start with that. Okay, then to get the equity value, we need to start from EBIT. We need to start from EBIT, then EBIT to free cash flow to the firm. Then basically we have revenue figure for the financial ending 31st March 2026. No, then we can get it as year 0. Basically we can get it as year 0. Year 0 we have revenue figure as 450 million. We have a revenue figure of 450 million. First we can forecast revenue of PLL for up to third year as well as for the fourth year as well. We can forecast, no, because based on the available information we can forecast that. Then basically for the first 3 years we can expect 12% growth for the revenue, and from fourth year onwards it is a 5% until to the perpetuity. Then basically we can calculate revenue for the first year, second year, third year and fourth year. For the first 3 years it is 12% increment. Then for the first 3 years it is 12% increment. Then if we incorporate that 12% increment, then basically how can we do that? 450 into 1.12. Then we can get the forecasted revenue figure for the first year. Then we can get it as 504. Then for the second year, how can we get 504 into 1.12 with the 12% increment, 504 into 1.12. Then we can get it as 56448. 56448. Then for the third year, same thing, we can incorporate 12% increment. Then we can get it as 632.22. And fourth year, we need to incorporate 5% growth. Basically, we need to incorporate 5% growth because from fourth year onward it is 5%. Therefore, we can incorporate the 5% growth for the third year revenue. Then based on that, basically 632.22 into 1.05, because basically we need to incorporate that 5% growth. Then if we incorporate 5% growth, then we can get revenue figure as 663.83. 663.83. That is the revenue. Then these are the revenue, forecasted revenue from first year to fourth year. Then from revenue we can get the EBIT, no, because we have the EBIT margin. Then for this question we have EBIT margin. Then basically for the first 3 years, then we can get EBIT margin as 18%. Then hereafter it is 21 from fourth year onwards. Then based on that EBIT margin we can calculate EBIT. Then basically EBIT margin, then for the first 3 year 3 years it is 18%, and for the 4th year it is 21%. It is 21%. It is 21%. Then if we multiply revenue by EBIT margin, then we can get the EBIT for that period නේ. මම හරිනේ. අපිට EBIT ගන්න පුළුවන් නේද නේද? If we multiply revenue by EBIT margin, then we can get what? EBIT for that period. Basically we can get EBIT for that period. Okay. Then මම මෙතන decimals yes, then for revenue, yes, that is a thing but මම මේ දැන් කියන්න ගිය එක තමයි here it is better to get the round of figures because as in the million we can continue with the round of figures. අපි round of figures වලින් calculation එක යන්න ඕන. මම revenue වල then here I use the decimals, but for that as well we can use the round of figures. Then here it is a 4 2 2, then we can say this as a 4. Yes, then for the easiness, මම හිතන්නේ අපිට ඒක ලේසි මොකද අපි calculation වල that is easy for our calculation. Then we can use the 504, 564, 632, 664. Then EBIT, if we multiply it by our revenue by EBIT margin, then we can get the EBIT that for period. Then for the first year we can get it as 91 million. Then for the second year 102, and for the third year 114, and for the fourth year 139. Like that we can get EBIT for that period. EBIT for that period. Then this is the EBIT. Actually our pre-cash flow valuation, pre-cash flow to the firm, that calculation we can start from this, from EBIT. Basically first we need to get what? First we need to get NOPAT. We call it as a NOPAT, net operating profit after tax. Net operating profit after tax. Sorry, NOPAT. Then how can we get the NOPAT? As I told you, NOPAT we can get EBIT into 1 minus T. EBIT into 1 minus T, then we can get NOPAT. Then basically EBIT we can multiply by what? EBIT we can multiply by 1 minus T. Then for this question, our corporate income tax rate we can get as 30%. No, අපේ අර operating cash flows වල කියනවා නේද corporate income tax is levied at 30% and payable in the same year. Then we can use that figure for our calculation purpose. Therefore we can get it as 30%. Basically EBIT we can multiply by 1 minus T. That means 1 minus 30%. Then for this we can basically get 91 into 1 minus 0.3. Then here 102 into 1 minus 0.3. Then for this 114 into 1 minus 0.3. And for this as well 139 into 1 minus 0.3. Then like that we can get what? NOPAT. We can get NOPAT. Then basically we can calculate the NOPAT for the period. For the first year we can get it as 64. Then for the second year 71, and third year 80, and fourth year we can get it as 98. Like that we can get NOPAT for that period. NOPAT for that period. Okay, then we have calculated the NOPAT. Then we can add back non-cash expenses. Then we can add back what? Non-cash expenses. Then for this example, then for this case study only non-cash expense is what? Then only non-cash expense is the depreciation. Then depreciation we can get as the non-cash expenses for that, for this case study. Then non-cash expense as depreciation as non-cash expense, it is 6% from the revenue. Then basically from the revenue 6% we can get as our non-cash expense, 6% as our non-cash expense. Then basically if we get the 6% from the revenue, we can get the depreciation. Then if we get like that, then we can get depreciation 6% from the revenue. Then here 30, 34, 38 and 40. Yes, like that we can get the depreciation 6%. It is a 6% from revenue. It is a 6% from revenue. It is 6% from revenue. Then we need to adjust what? Capex as well as the working capital movement. Then we can deduct the capex. Then how are the capex? Then for the first 3 years it is 8% from revenue. Then for the first 3 years it is 8% from revenue, and for the fourth year it is 6%. Then for the first 3 years it is 8%, and for the fourth year it is 6% from the revenue. Then if we get like that, then we can get it as 40. Then for the second year 45, 51, and for the fourth year it is 6% from the revenue. It is 6% from the revenue, therefore we can see it as 40. Then like that we can adjust the capex. Then we need to adjust the working capital movements. Then basically for the working capital movements, first we need to calculate the working capital. Then we have to do the small working for that. Okay, for the purpose of getting the working capital, we have to do the special small like working. Then here 1, 2, 3, 4. Then working capital is 10% from revenue. No, it is a 10% from the annual revenue. Therefore, we need to put the revenue figure. Then here 450, 504, 564, 632 and 664. Then working capital requirement of that year, it is 10% from the revenue. No, then basically for the ended 31st March 2026, we can get it as 45. Then for the first year, අපි round off කරලා ගත්තොත්, if we get the round off figure 50, 56, 63 and 66 විදියට ගන්න පුළුවන් working capital requirement for that year. Important is here we need to adjust what? Here we need to adjust the working capital movements. Then here we can identify the working capital movements, changes of working capital, basically changes of working capital. Then for the first year we can get it as 5, then additionally we need the 5. Then for the second year we can say it as 6, and for the third year it is 7, and for the fourth year it is 3. Then these are additional requirements, therefore we need to put it as cash outflow or the minus. එක අපි minus figure එකක් විදිහට දාන්න ඕන, because these are the additional requirement. Therefore we can put minus changes of working capital 5, 6, 7, 3. 5, 6, 7, 3. Oh, yes, additional or the additional working capital movements. Requirements here only we need to adjust, not our total requirement. Okay. Then here 10% is the what? Annual revenue. The working capital is currently maintained at 10% from annual revenue. As at any year, they are trying to maintain as a 10%. Additional working capital investment will be required in line with the future revenue growth. Then basically that Additional one, this 5, 6, 7, 3, these are coming as a result of the revenue growth. Then, for example, if our revenue same for the each year, it is not changed, it is 45, 45, 45, 45 for each year. But as our revenue, then here we forecasted our revenue with 12% growth, what happened for our working capital movements? Then here we put that. Now we can get what? Now we can get ultimately this plus this minus this minus this. Now we can get pre-cash flow to the firm. We can get pre-cash flow to the firm. Then pre-cash flow to the firm we can get per each year. $48, $54, $60 and $94. Then this is the free cash flow to the firm for each year. And to get enterprise value, we need to get the present value of each of these cash flows, as well as here we need what? We need terminal value. We need terminal value. That means here we need to do another working for the purpose of getting terminal value. Actually, we don't need working, then simply working a terminal value. We can get pre-cash flow to the firm of fourth year into 1 plus G divided by WACC minus G. That is a formula that we can use to get the terminal value. But thing is, here we don't know the WACC. WACC. That means we need to calculate what? Here we need to calculate the WACC. We need the WACC. Then, as we discuss, here WACC we can get as a combination of the cost of debt and the cost of equity. But for the cost of equity, we need to get cost of equity based on the CAPM model. Then we have the comparable company beta. Then based on that, we need to derive the beta for our company, beta for the PLL. Then based on that, we can get the cost of equity as well as the cost of equity, and based on that we can get the ultimately CAPM. Then we need to do the working for that. Then based on that we can derive the WACC. Then for the purpose of continuing my calculation, I will remove this one from here, this working capital movement. Then if you need, then please take a screenshot quickly, because I will remove this calculation for the working capital movement. Sorry, I didn't get your point. So did you take working capital as 40? Then what's the 40? Then basically, then working capital requirement based on given information is the 10% from revenue. No? Then for each year, then total working capital requirement for that period, it is a 10% from the revenue. Then we calculated it for each year 45, 50, 56, 63 and 66. Then basically you can see, then for the 2026 it is 45, but for the first year it is a 50. Then we need additional 5. Then that 5 we need to take as a cash outflow, because it is additional one. That is why we put it as a minus. Then for the next year 56, 63, 66. Then we can add by the additional requirement. That additional requirement we need to put as a cash outflow. Basically it's a deduction from our NOPLAT. Okay. Yes, already spent 45. For the first year, the total requirement is 50. Then additional requirement is a 5. This is for the business valuation purpose. Then as of 31st March, this is not NPV calculation, this is business valuation. Okay, then the purpose of adjusting this working capital is to get the pre-cash flow to the firm මේ පටලව ගන්න එපා. Then that assumption is for the NPV calculation, okay? At end of the useful lifetime, then normally we assume that we can recover our working capital. That is for the NPV, but for free cash flow to the firm, that is not about like that. Then here we are trying to get the free cash flow to the firm, basically cash flow. අපි මේ cash flow requirement cash flow එක ගන්නේ no, then basically ඇත්තටම මේ information එක දීලා තියෙන්නේ තොන්න ඔය mix එකගේ පොඩවලව පටලවන්න තමයි information එක තියෙන්නේ. Then we can calculate basically EBITDA as well as a free cash flow to the firm for the fourth year as well නේ. මට fourth year එකටත් ගන්න පුළුවන්. ඒ නිසා fourth year එකේ ඉඳලා ඉස්සරහට දැන් basically we incorporated that 5% revenue growth here නේ. ඒතකොට fourth year එකේ revenue එක තියෙනවා, EBIT එක තියෙනවා. Other we have other information as well. Therefore for the fourth year as well we can get what? Free cash flow to the firm. Then but from fifth year onwards we don't have any information as well as we assume we are expecting 5% growth in perpetuity. Therefore we can calculate the free cash terminal value from fifth year onwards. Then basically fifth year cash flow එක base කරලා අපි terminal value එක ගන්නවා. No, then here we don't need to deduct the 45 because we have already within our cycle we have already invested 45. Then we need additional 5 ne. That one we need to deduct as a cash flow. Then generally හිතන්න අපි cash flow එක හදන විදිය. Cash flow එක හදද්දී we start from what? Profit before tax. Then we did adjustment for what? Other non-cash expenses and whatever all of those things. After that we did adjustment for working capital movement, no? Then that working capital movement is for that period. Then for the getting the purpose of cash flows only we need to adjust that movement. So the additional requirement or the okay plus වෙන්න පුළුවන් minus වෙන්න පුළුවන්. That one we need to think, okay? This is මේක හිතන්නේ cash flow එක මම මේ කැල් කරන්නේ. අපේ accounting වල as per LKS 7 indirect method එකේ අපි cash flow එක ගන්නවා. ඒතර අපි working capital movement එක adjust කරනවා. ඒතර ඒක cash out එකක්. Then same concept that but here we are trying to get the free cash flow to the firm. Okay. Yeah. We have to do calculation for WACC. We have to do calculation for WACC. Then first we need to get what? First we need to calculate cost of equity. We need to calculate cost of equity. Then to get the cost of equity we need to apply the CAPM model. Cost of equity, then using the CAPM model, then how can we get the cost of equity using the CAPM model? What is the formula? What is the formula for the CAPM model? For the CAPM model, what is the formula? Yes, risk-free rate plus beta into market rate minus risk-free rate. Basically we call this as premium, no? Market premium. This difference we call as market premium. Then for this example we know about the risk-free rate, then it is 10%, no? Risk-free rate we can get as 10%. because for that NPV, under the NPV part, we have information for that. It is, we can get as 10%, and risk premium we can get it as 6%. But thing is, we don't know about what beta for this company, because this is private limited company, and up to now we don't have any information regarding the beta. Only option is what, here we have comparable company beta, then based on that we can derive the beta for the our PLL. Then for that purpose, first we have the equity beta, no, equity beta of the listed comparable logistic company, the same type of the company. Sorry, we have beta for the same type of comparable company. It has a 1.4. It has a 1.4. First, it is equity beta. We need to ungear it and get in the, we can get the assess beta. Then again we need to adjust that assess beta with the our PLL target capital structure. Then we can get the geared beta for our PLL. Then here first the step should be, we need to what, get in assess beta, get in assess beta for comparable company, for comparable company, for comparable company. First we need to get the assess beta for the comparable company. Then how can we get that? What is the formula for ungeared? Gearing and gearing. Then basically, then he will be ungeared. Then what is the formula for ungearing? Beta of ungeared equal to what? Geared beta, basically geared beta we can divide by 1 plus 1 minus t 1 plus 1 minus t into debt divided by equity, into debt divided by equity. 1 plus 1 minus t into debt divided by equity. Then using this formula we can get the assess beta for that comparable company. Basically we can ungear the geared beta. We can ungear the geared beta. Basically we can ungear the geared beta. Then we can substitute the available information. Then basically 1.4 is the geared beta, the equity beta for this. Then 1 plus 1 minus t is a tax rate 0.3 into, how about their capital structure, debt to equity ratio, it is a 50-50. 50-50 means 50-50. Then we can further resolve this one, and then ultimately we can get it as for the 2 decimal as 0.82. 0.82. After resolving this, we can get ungeared beta of that comparable company as 0.82. Then this then what is the meaning of that ungeared beta? මොකද ungeared beta කියන්නේ if 100% equity නම් එයාගේ තියෙන්නේ අන්න ඒ වෙලාවේ එයාගේ beta එක තමයි නේද? beta එකෙන් පෙන්නන අපේ market risk factor එක. Then basically from beta we can get the understand about the risk factor, market risk factor of that premium, of that company. Then basically then 1.40 is the geared beta based on their capital structure. Then I hope all of you know about the basically we can identify what? Basically we can identify relationship with our equity value with the gearing. අපි අර තියෙනවා නේද? මොලිග්ලියානියන් මිලර් තියරි එක අපිට ඉස්සරහට තියෙනවා. question number 4 වලත් ওই link එක තියෙනවා කතා කරන cost of equity part එක යටතේ. මොලිග්ලියාන් මිලර් මේවලත් අනු නේද? එතකොට මෙතන 0.82 is our assess beta with considering the 100% equity financing. Basically it's like that. Then we need to get the equity beta for our PLL. Basically based on this assess beta, then we can get equity beta for PLL. Then how can we get? how can we get G at beta equal to G at beta, we can multiply it by 1 plus 1 minus t into 1 plus 1 minus t into debt divided by equity. Using this formula, we can get the equity beta for the PLL. Then basically, as we calculated, G at beta 0.82 into 1 plus 1 minus 0.3 into target debt to equity ratio for the PLL. Then as NTP expects it as 40 to 60. Then debt as 40, equity as 60. Then we can get it as 40 to 60. Then if we get like that, 40 to 60, after resolving we can get for 2 decimal as 1.21. Then basically our equity beta for the PLL, with considering the expected capital structure, we can get it as 1.21. Okay, then basically you can see that for the comparable company their beta is 1.40 because they have 50-50 ratio for the debt to equity, but for for PLL we expect 40 to 60. Then we are expecting low debt than that target company. Therefore, what happened to our beta? It is less than the target company beta. Then you can see that as well. Whatever. Then we can get our beta as 1.21. Then we can get our beta as 1.21. Now we can get CAPM. Now we can get cost of equity based on the CAPM. Then 10% plus 1.21 into 6%. 1.21 into 6%. Then we can get it as 17.26. 17.26 as our cost of equity based on the CAPM model. Based on the CAPM model, we can get it as 17.26. 17.26. Okay. Okay, then basically based on the CAPM model, then we can get our cost of equity for PLL as 17.26. Then we need to get the cost of debt as well. Then we need to calculate cost of debt as well. Then for the cost of debt, as per given information, PLL currently has outstanding long-term bank borrowing with a pre-tax borrowing cost of 12%. Then currently the pre-tax borrowing cost is 12%. Then basically cost of debt we can get our interest rate R into 1 minus T. Then basically pre-tax interest rate, it is 12% into 1 minus T, 1 minus 0.3. Then basically 12% into 1 minus 0.3. Then we can get our cost of debt as, if we multiply 0.7 in by 12%, then we can get it as 8.4. Basically 8.4. We can get cost of debt as 8.4. Cost of debt as 8.4. we can get it as 8.4. Okay, then cost of debt we can get it as 8.4. Up to now, do you need any further clarification, or do you have any issue with or the concern with the cost of equity and the cost of debt calculation? If you have anything, please ask. Then based on that cost of equity and the cost of debt, we can calculate WACC. We can calculate WACC for that business, WACC for this business. We can calculate the WACC for this business based on the cost of equity, cost of debt, as well as considering the expected their capital structure. No, you don't get any formula. You will not get any formula. Okay, do you need any further clarification? Please ask. Okay, then we can calculate WACC. Then here to calculate WACC, basically we need to consider our expected ratio of 60-40. Then basically for equity 60% and for debt 40%. Therefore, we can multiply our 17.26 by 60% and debt 8.4 by 40. Then summation of these two we can get as our what? As our WACC. Then basically if we multiply 17.26 by 60%, then 10.36. We can get it as 10.36. And for the debt, 8.4 into 40%, we can get it as 3.36. 3.36. Then that total 13.72 we can get as 13.72 we can get as WACC of PLL. WACC of PLL for the purpose of valuing this company, we can get it as 17.72. Okay, that is the WACC of this company. WACC of this company 17.72. Okay, now we have the WACC. Then based on that we can get what? We can calculate terminal value for this business. Terminal value of the terminal value for the PLL beyond the 5th year. As we have information for the 4th year as well, then we can start it from the terminal value for the 5th year, because we have the information for the 4th year as well. Therefore, we can get the free cash flow of the firm for the fourth year. Then from fifth year onwards, then we can get the terminal value. Then basically, free cash flow of the firm of fourth year 94 into growth rate, we need to get it as 5% because for the revenue, it is mentioned it as a 5% per annum in perpetuity. Therefore, we can consider it as a growth rate for our calculation purpose. We can get it as a growth rate 1 plus 0.05 divided by 0.1372 WACC, that's our WACC, minus 0.05 of our growth rate. Then after resolving this, then we can get terminal value as 1137. Then terminal value we need to put it under the fourth year 1137. Basically, then terminal value is the value of the future forecasted or the future cash flows as at end of the fourth year, because we are starting it from the fifth year. Therefore, we can put it as a cash flow which will be occurred as at end of the fourth year. Therefore, 1137 we can put it under the fourth year. Now, we can get the present value of each year cash flows. Then here we need to get the discount factor at 13.72. We need to get the discount factor at 13.72. Then if we get the discount factor at 13.72, yes, for 3 decimals we can get it for the first year 0.880, for the second year 0.774, then for the third year 0.681, and for the fourth year 0.599. I think no, for the WACC I think it is better to use it as a 13.72. If you need, you can use it as a 14%, but for the WACC, for only WACC, then I am using it as 13.72 rather than rounding off. Okay. Yes, I think I got one question asking why we can't get the terminal value from fourth year. Then basically you can see for the fourth year we have different capex. Then for example, then if we only calculate the free cash flow to the firm for the third year and multiply that third year cash flows by 1.05 and divide it by WACC minus G, then we can get figure. But there is issue with the accuracy of that, because for the fourth year you can see for the capex it is 6%, not 8%. Then it is not captured if we calculate the terminal value after third year. Then to capture that one, here we need to calculate the cash flows for the fourth year. Then capex gathot until third year it is 8%, but from fourth year onward it is 6%. So එතන අපේ cash flows වල improvement එකක් වෙනවා. මොකද improvement එක කියන්නේ increase එකක් වෙනවා, because මෙතන 51 තිබ්බ එක මෙතන 40 වලට වෙලා තියෙනවා, revenue එක වැඩි වුණා. So that impact it is not captured if we calculate the terminal value after third year. That's the reason we calculated the free cash flow to the firm for the fourth year, and the reason why we are getting the terminal value. මං හිතනවා තේරෙන්නේ නැති කියන එක. The reason why here we calculated fourth year free cash flow to the firm, and then the reason why I calculate the terminal value after fourth year. The main reason is to capture that capex impact, because until third year it is 8%, but from fourth year onwards 6%. එතකොට ඒක capture වෙන්නේ නැහැ. මම මෙතනින් terminal value එක ගත්තොත්. ඒ නිසා තමයි මෙතනින් terminal value එක ගන්නෙ. So why use 5% as growth rate for terminal value? Yeah, then basically, then to get the terminal value, that's a formula. Then free cash flow to the firm into growth divided by WACC minus growth. That's a general formula. Then then to derive this formula there is a back story for that. ඒක ඔයාලගේ මට්ටමින් වැදගත් නෑ. මොකද ওই formula එකත් තියෙනවා develop වෙන මේ එකක්. ඒතකොට ඒ develop වෙලා ආවිල්ලා තියෙන method එකකින් just here we need to deduct the growth back minus growth. Okay, now we can get the present value of each year cash flow, then present value, then for the first year we can get it as $42, then here also 42, 41, and for the fourth year we can get it as 738. Then summation of all of these cash flows we can say as enterprise value. We can say this as an enterprise value. Then here we can get enterprise value as 862. But okay, total 862. This is the what? Enterprise value of the business. Enterprise value. This is not equity value, this is the enterprise value, which is for all, this is for the entire business organization for both equity as well as for debt holders. No. Where is this? How did you say it as earning growth is 21%? Then for the EBITDA margin to 21%, from 18 to 20, not growth. Please read the information carefully, okay? 21% is not growth, it is the EBITDA margin. Then basically up to third year it is 18%, and from fourth year onward it is 21%. It is not growth. Sorry, then for the fourth year you need to consider this both 94 plus 1,137, because this is a free cash flow to the firm for the fourth year, as well as this terminal value, also this plus this, because this is the free cash flow to the firm for the fourth year, but this is the present value of the future cash flows as at end of the fourth year. Then therefore we need to consider that as well. Yes, this 738 is, that is the present value of this plus this. Sorry, this plus this. How's this terminal value present value as at end of the fourth year for the future cash flows from 50 onwards. For the fourth year, this one also we need to consider. Okay, then we need to get the equity value, no? Then as we discuss, how can we get the equity value? As we discuss, how can we get the equity value? Then as we discuss, how can you get the equity value? Then basically equity value we can get plus cash minus debt. Then basically plus cash minus debt. Then here we need to add the cash and cash equivalents. This is 50 minus debt of 40. Then we can get what? Equity value for this business. Then for the equity value we can get it as 872. Then basically equity value of this business we can get as how much? 872 million. Okay. Then we have calculate the estimate the equity value. Then before moving to the next requirement, then if you need any further clarification regarding this equity value calculation about this calculation, please quickly ask. Then actually this is not rocket science. If you know the logic behind the calculation, then you can do this easily. Then for this total question, it is total allocated time 90 minutes. No, then within that 90 minutes, if you know the logic, definitely you can do this calculation as I think minimum within 20 minutes. Or the way of getting the free cash flow to the firm, then way of getting the terminal value and this WACC calculation, then everything every logic what behind this calculation, if you know, that's a minimum time that you need to calculate this getting this equity value. හරිද? ඒ නිසා ටයිම් එක මදි කියන්න බෑ. වැදගත්ම දේ ඔයාලා concept එක දන්නවා නම් concept එක ගැන අවබෝධයක් තියෙනවා නම් then you can do this calculation. So if we get the answer as 860 years, then basically then for strategic level, as I know, because it is not confirmed, but as I know, then for your examination, you will not get answers for the final answers. Okay, then you will get marks. You will not get marks for the final answer. You will get marks for your calculations as well as your rationale, then your justification, then all of these your marks schemes, the combination of all of those. So then basically for your final answer, then maybe allocated mark 1 mark or 2 marks. Okay, it is not important. මොකද මේක මේ පහේ ශිෂ්‍යත්වයවත් මේ අර ඉස්කෝලේ කාලේ එක්සෑම් එකක් නෙමෙයි, this chartered examination. එතකොට final answer එකට mark calculation එක it is a minimum, it is not a considerable amount. Okay, as I know, because marking scheme may be changed based on the examiner. Or then you are asking for the project appraisal, not for this one, no? Chamoth, I think so. It is wrong to use the company back for its project appraisal. Yes, I will explain it when come to our fourth requirement. Then under the fourth requirement, I will explain about that because yes. Okay, then our next requirement is what? Assess whether the proposed acquisition would be financially and operationally justifiable based on the expected acquisition consideration of 900 million and other operational synergies. What do you think about that? Then for this acquisition, our suggested acquisition price is 900 million. 900 million, but based on our valuation, equity value for this company we got as how much? 872. What do you think whether it is financially justifiable to acquire this new company with the consideration of 900 million? What is your suggestion, or what is your opinion about that? What do you think about that? It is okay to acquire this company at 900 million, then basically the marker, the intrinsic value, basically the equity value, we can say the intrinsic value, then for this company is 872, the value of this company 872, but we are planning to pay 900 million. We are planning to pay 900 million. Is it okay if we pay more than our intrinsic value? Yes, yes. I am expecting more answers. Then I got few. Then more answers. What do you think? Because that's a important part of this question. Then not getting this value, okay. Then given that recommendation or this this access part. That's the important part of this question. You have to justify whatever you tell. Then you can say it is not financially justifiable. Then you have to give rationale. Why did you say it as like that? අය වා කිව්වේ මේක හොඳ නැහැ කියලා වාට justify කරන්න ඕන. එහෙම නැත්නම් වා කියනවා නෑ මේක හොඳයි. Then it is okay to pay premium. Then basically we are planning to pay premium for this company, no? Then basically intrinsic value 872, but we are paying 900 million. Then basically we are planning to pay more 28 million. Yes, additional 28 million of premium for this business. Premium, 28 million value of the premium. Then if you say yes, it is okay to pay this 28 million, then we have to justify. You have to justify why it is okay to pay. Then අනිත් පැත්තට කිව්වොත් නෑ මේක හොඳ නැහැ කියලා. You have to justify. But for this example, most suitable answer is what? Then most suitable thing what we can say, is it okay to pay this premium or not? I think it is okay to pay 28 million of premium and to acquire this company at 900 million. It is okay. Why I can say it as like that? Then I got several answers. Since add value to the parent company, I will recommend to go with 900 million. Yes. The one reason is that one. Then with the acquisition of this company, NTP can experience several operational synergies. That company experience several operational synergies. Then with that, it will add value to the parent company, as well as it is like acquisition of the it is like the acquisition of the supply chain, because that terminal, for the terminal company, as I told you, that interterminal trucking is a supplier. Then with that, it is a integration of their supply chain. Then with that, we can experience several operational synergies, as well as it may be a reason for the reduction of their cost, because as if they will acquire this new company, then they can share the administration cost as well as for the outsourcing cost, because currently NTP, they are getting service from suppliers, then they are paying some amount for that supplier for the purpose of that interterminal trucking. But if NTP will acquire that new company, they don't have to pay that one. Then as well as they can share that administration cost with them. Then basically for the admin, for the finance department, and for the HR department, they can share that cost. Then they can benefit like that benefit as well. And also, most important thing is, for this valuation, we didn't incorporate that hidden synergies of that acquisition. Then as I told you, then there may be some operational synergies, there may be some financial synergies, but we didn't incorporate those synergies into this calculation. And also, as the result of that acquisition, that revenue growth may be more than what we expected for this calculation. As well as for the EBITDA margin, it may be higher than this, because as I told you, then after acquisition, they can share some kind of the cost items. Then with that, they can expect more EBITDA margin than this. Then with that, what happened for valuation? It may be go more than this 872. 872, okay? Therefore, then we can say, yes, it is okay to pay additional premium for this company as the reason of, then we can say several reasons. Yes, so as improve the NTP vessel turnaround, yes. From question itself it is mentioned that with that they can get many operational synergies. Then several reasons we can say. Then one thing, as I told you, then operational synergies. Then NTP can experience several operational synergies as a result of this acquisition. Therefore, it is okay. And other one is the cost saving, because they can charge some administration cost, as well as with the that outsourcing cost reduction, then they can there are maybe some impact on that as well with profitability. And also regarding the competition position, they can establish more strength port terminal company within the port of Colombo. For NTP, they can establish more strength within the port terminal within the Colombo port, because they have their own interterminal truck company. Then with that, they can plan the movements of the interterminal containers without any delays. So එයාගේ operationally ආට strength එකක් වෙනවා. මොකද ඇත්තටම considering the current practical situation of the Colombo port, එතන පොඩ්ඩක් the terminals වල there is issue with that. හරිද? එතකොට අපිටම කියලා යාට තියෙනවා නම් company එකක්, they can experience more competition position, more strength competitive position. And regarding the financial synergies, as I told you, then these cash flows may be more strength than what we expected if that acquisition will happen, because that PLL, they are directly linked with the NTP, which is the port terminal company. Therefore they can experience more growth in these cash flows. Another one is the hidden synergies. That synergies value, these are not incorporated into this calculation. There may be some hidden synergies like joint procurement service, then low operational overhead cost, and in as well as about the joint procurement service, there may be most of the hidden synergies with this acquisition, but those are not incorporated into this calculation. But if we incorporate, basically we don't have numbers. Then if we have the numbers, if we can accurately calculate, then we can incorporate those into this calculation, and then we can get the value. But we didn't do that. So එහෙම තිබ්බොත් මේ value එක තව වැඩි වෙනවා. And EBITDA margin, as I told you, there may be increment in EBITDA margin with this acquisition, because as I told you, there may be some shared cost item. Therefore as a result of that, NTP as well as PLL, they can share some kind of the common cost like finance department as well as HR department, like that. They can do that like that. Then with that, they can improve the EBITDA margin and strong revenue growth potential, because as a result of this acquisition, or the possible acquisition, PLL, they can get access for the more businesses with the combination of the NTB. Then with that, it may be a reason for the revenue growth. And yes, those are the things what we can say. Other than that, let's see what about your thoughts. Yes, get competitive advantage, unrecorded intangible assets, yes, like that. Then synergies maybe, there may be some kind of unrecorded intangible assets. Then with those explanations, you have to justify, yes, it is okay to pay this premium. And also this one is small premium, no, with considering the intrinsic value, I think it is a 3%. Then if we get this 28 as a percentage of this 872, it is basically 3%. Okay, it is basically 3%. Then it is okay to pay like that. It's small premium, because we can get more benefits rather than this 3% premium. Okay, then you can justify that answer. Then if you justify that and say yes, it is okay to pay, then you can get the 20 marks. Then other way, then if you say it is not okay, actually we don't have sufficient enough information to prove that. That's the thing. මොකද මේක ප්‍රූව් කරන්න, කියන්නේ අපි මේ ප්‍රීමියම් එක පේ කරනවා කියන එක ඕකේ කියලා ප්‍රූව් කරන්න අපිට ඕන තරම් තියෙනවා දේවල්, facts, points. We have to explain about that. But if we need to say no, it is not okay, I think we don't have our more strength facts නැහැ ඒක explain කරන්න මේක ගන්න එක හොඳ නැහැ කියලා නිසා acquisition එක okay කියන එක then we can just say about that. Okay, that is about the first requirement A. uh, yes, before move to the next requirement, with the time now it is almost yes 9:15. Yes. Then for today's session, maximum time what I can continue till 10:30. Then let's see whether we can go for another session. Okay. Then for the before move on to the B, it is a like high level summary note preparation. No? Then if you need any further clarification on the requirement A, then if you need any further explanation, please ask regarding this one before move on to the next one. Okay. Uh, Sorry. Then I hope all of you are okay with this. Then we can move to the next one. Prepare a high level summary note for the board explaining how the finance function can support the successful implementation of the proposed ERP system and contribute to technology driven operation improvements within NTP. Then basically here you have to, it is a 6 marks allocated questions now, then at least you can say the 5 to 6 points regarding the importance, or then how finance team can help for the purpose of implementation of this ERP system. Then we can say, we can explain about that. It's a 6 marks allocated now, then for each item then you can explain 3 to 4 lines. 3 to 4 lines of the sentence can පැරායකක් විදියට point 6ක් maximum වාට කියන්න පුළුවන් නම් then you can get this mark. It's a high level summary ne. Then here you don't need to explain more about those. Okay, then only thing is you will need to point out the point and then you can give a small explanation for that one. Then what do you think about this? How finance team or the finance function can help for the purpose of implementing this? How? What do you think? How finance function can help for the successful implementation of ERP system? Quickly, ඔයාලා හිතන විදිහට point ටිකක් කියන්න කොහොමද help කරන්න පුළුවන් මේ ERP implementation එකට? මොකද then that financial accountant, then yes, financial accountant can give some kind of the support, but as I think management accountant, from management accountant side, then that ERP implementation, for that they can give the more help. As you think, what are the points that you think that finance function can help for the purpose of that ERP system? Yes, it is integrated system, integrating, because currently they don't have any integrated system. It is an integrating system. Then how finance function can help for the purpose of successful implementation of that ERP system? Yes, it is like integrated system. Yes, data integrity. Yes, because currently they have system, then they have to transfer that data into the new system. That's one thing. And also that yes, for the purpose of integrating, they can support integration, transparency and real time updating, seamless decision making, can get decision making, get the involvement of other departments to incorporate the sound internal controls. Yes, good, because then currently they have system but without integrating, but once integrated that all system into one, sound internal control is more important. මොකද එතන finance function එකම විතරක් නෙවෙයි අනිත් function සේරම එක තැනකට එනවා. එතකොට ඒක ඉතාමත් වැදගත්. Yes, collaborations. Yes, then I can say finance team, they can start their support by financial evaluation of the ERP project. Because important thing is about that, first we need to analyze whether it is financial feasibility or not implement this ERP. සමහරට integration එක financially feasible නැති වෙන්න පුළුවන්. That is, we need to get about that. Then for that, finance department only can do that analysis and give the suggestion and the solution about that. Okay, that is one thing. And second one, budgeting and cost control. Then regarding the ERP implementation, it may be a huge investment. Therefore, that budgetary control and investment tracking is more important. That is the more important part. Okay, budgetary control and the tracking part. Therefore, definitely finance department should have about the like tracking about those, about the budgeting and the cost control. And another important thing is selecting the ERP vendor. That's another important thing. then finance department, they can give direct support about that, because finance department, they may have more understand about the ERP system than other departments, therefore they can give the procurement supply evaluation thing, and then they can select the most suitable supplier regarding the ERP implementation and for the continuation. And the next one, yes, as one of you told, to design the financial control within the ERP system, that is the most important. Sound financial control, it is mandatory. And improving that data integrations, improving the accuracy of data integration and the data transfer. Because from the existing system, we have to transfer information to the new system, as well as then after integration, we have to check the accuracy about the integrated information. Then for that, we have to implement some mechanism to check that. Then finance department can help with that. And other important thing is change management. This is a change, completely change for the entire business organization. Then finance department, they can support with that change management, especially regarding the employees, because employees, they may be some kind of the fear regarding the change about those things. Then change management is the more important part. Then finance department can give full support regarding that change management. Explaining about the importance and giving the training, like that they can give the change management. And other thing is the especially for the post integration of the PLL based on the post acquisition, finance department, they can give their support regarding that one with consolidated financial reporting, because after acquisition of that NPA, that we have to consolidate the financial statement as a group, then we have to do that one. Then for that purpose, then ERP system also need to facilitate about those things. Then finance department can review about those things and give the suggestion about those things. Then basically about that, and also standardized accounting process, that's another important thing. Then as all department integrated into one system, that in standardized process implementation is the important thing. Then finance department implement about that as well. Then I think we have discussed several points, then you can say about those things. Okay, that is about the finance team support regarding that ERP implementation. Can we get answers for the explanation part later? Yes, I will share these points with you after completion of this discussion. And also then please note that as we have another 3 questions today, with the time limitation, we cannot complete all of these 3 questions. Then additional mock examination discussion will be held next Tuesday as well for the strategic finance and management accounting subject, as today we don't have enough time to complete these discussions. Okay, then now I have just discussion with the CA Institute, then they will okay with that. Then another session will be held this Tuesday, 16th, I think 16, no, yeah, 14, 15, 16, yeah, 16, from 7:30 p.m. onwards, via Zoom, not via Zoom, via Microsoft Teams. Okay, then please note that as well. Then probably then today only we can discuss this question number 1, with as we utilize more time for this one for the business valuation. Then I think that is okay to utilize more time for this business valuation, because this is a major part of our syllabus, as well as most students, they, as I noticed, most students, they don't have some idea about some kind of the rationale behind this business valuation. Then from this discussion, I am trying to give that. Okay, I am trying to explain that. That's why I allocated more time for this discussion. But for others, I am not planning to allocate more time like that. Then, assuming all of you know about the theories, but for the business valuation, I allocated more time. With that purpose, give the rationale behind, give the explanation rationale behind this calculation and everything. Okay, let's continue our calculation. Then that's about the requirement B. Then for the requirement C, evaluate the importance of integrating sustainability consideration into strategic investment appraisal and long-term business planning of NTP. Then basically sustainability is the emerging trend in this 21st century. අපිට දැන් තියෙනවා standards නේද SLFRS S1 and S2 as then in Sri Lanka also we have separate standards for the sustainability reporting. Then sustainability is the more important. Then here you examine as what? Because as a CFO you have to think about those as well. Because then for our strategic investment appraisal as well as for our long term business planning we have to integrate sustainability. Then as you think, why can we say sustainability as the more important regarding long-term business planning as well as for the strategic investment appraisal? Can you say few points? Why did you think importance of integrating that sustainability into the business planning as well as for the investment appraisal? What do you think? Can you give few points regarding this? Then don't you have any idea about that? Importance of the sustainability regarding long-term business planning? Yes, climate risks. I am asking importance to gain potential foreign investors. Yes. Then especially for the business like NTP, then NPT is the port terminal company. Then there is a emerging trend within that logistic company, especially within the shipping lines. Shipping lines they have like trend more consider about the sustainability. Then, for example, actually, then I am currently working at the port terminal company. Then that's the reason why I got this mini case study based on the port terminal company. Then, as I understand, then most of the shipping lines as well as the foreign investors regarding this logistic company and as well as within the terminal companies, they are thinking about the sustainability. If that company is more working towards the sustainability, then they are okay to invest in that company as well as they are okay to make partnership with that company as well. Therefore, yes, to gain potential foreign investors, yes, with that then we can attract more foreign investors into the business. That's one thing. And sustainability gives value added to business, long-term value creation, survival of business. Yes, basically survival of business, as I told you, then most of the foreign customers, they are thinking about most of the customers. Then for the port terminal company, shipping lines are the customers. No, they are thinking about the sustainability of that terminal company. They are thinking about that. Then if that terminal company is a more sustainability related company, then they are okay to deal with that company. They are okay to do business with that company. Yes, to sustain, definitely we should have that sustainability related things. Currently, stakeholder consider about 3 P's. Yes, profit, planet, people, not only mere profit. Yes, definitely. I think there is question based on that concept as well. Then I think question number 2 or 3. Yes, basically, stakeholders, including internal and external, they are thinking about the 3 P's. Yes, it is a long-term focus help to improve stakeholder confidence. Yes, that one is also correct. Investor requirements, reputation improvements. Yes, reputation. Yes, with the sustainability related things, we can improve our reputation to align with the international standard, especially in European Union. Yes, maybe competitive advantage compared with competitors. Yes, that is the most important thing. To strategic positioning, to establishing correct strategic position or to compete with competitors, yes, definitely we can use this sustainability. Increased reputation and legal compliance. Yes, another important is the legal compliance. Then basically SLFRS S1, SLFRS S2, these are standards coming from where? It is a legal requirement, no? මම standards legal requirement and 1995 act එකෙන් එන්නේ. ඒතර ඒ compliance වෙනකොට එතන requirements ඊට අමතරව තව central environment authority එක තියෙනවා. ඒතර ඒ වගේ requirements තියෙනවා. Then to comply with these things, yes, definitely we should align or we should incorporate sustainability thing into our long term financial goals. I think most of you told answers what I expected to explain. Yes. Yes, those are the points what you need to explain regarding this. This one also 5 marks allocated, no, then maximum it is enough to explain the 5 points. Okay, it's maximum enough to explain the 5 points regarding this. Then question D, prepare evaluation of the financial feasibility of the proposed automated QC investment project. Clearly show all calculation, assumption and supporting workings. I think I don't have any further explanation regarding this. At the initial point I explained the purpose of putting that information as well as a way of calculating. Then we can continue our calculation and then simply we can get the investment project. Actually, then later I thought, actually I didn't do that. I think I might include the additional requirement like prepare and evaluation of the financial feasibility of the proposed QC project, and then I might include some additional information and then I might ask the but මේකේ evaluation එකක් වගේ අහන්න තිබ්බත් මේ part එක මේකේ missing actually 19 marks allocated for this one, but 2 marks වැඩි 19 marks මේ ප්‍රශ්න ටෙස්ට් එකට අවශ්‍යත් නැහැ. Whatever, then here we have to prepare let's prepare evaluation for the financial feasibility of that QCA project. Okay, let's quickly do that one because we have already discussed main points regarding that. Only we have to do that calculation. Okay, let's move on to the calculation. Then basically the useful lifetime of this project, it is 12 years now. Then basically we have to do calculation for 0, 1, 2, 3, 4, 5, 6, 7, 8, 10, 11, 12. Okay. Then basically initial investment for this project we can put it as 400 million because Yes, then to for the purpose of purchasing this QC, we can put it as 400 million initial investment. It's a cash outflow. Then residual value as at end of the 12th year, then it is a 10 million. Therefore, as at end of the 12th year, then here we can put it as a cash inflow. We can put it as cash inflow. Then economic useful life of this project is 2 years and estimated residual value. Yeah, we put all of this information, all of these details into here. Then working capital assumptions. Working capital of the 8 million is required at the start of the project. Then basically at the start of the project, it is required 80 million of working capital. Therefore, we can put it as a cash outflow. 80 million working capital requirement for this project, or the initial working capital. And working capital increased by 50 million at the beginning of each year from year 1 to 10. Year 1 to 10. Basically, 15 million at beginning of each year from year 1 to 10. I think then the here purpose of putting this beginning of no, then some of us can use the Grovin annuity formula for this. For which one? Then actually back to topic. Then at the beginning of each year, then as all of you know, then basically if we say at the end of the each year, that's okay to put. Then for example at the end of the first year, second year, third year, then we can put 1, second, third, like that we can put. But here then for the working capital increase, it is a 15 million at the beginning of each year from year 1 to 10. No, then beginning of the each year mean, then for example if it is the beginning of the second year, then basically we need to put it as a cash outflow of which year? Cash outflow of first year, no? එහෙම නේද අපි ඉගෙන ගන්න තියෙන්නේ. then ඒ නිසා මෙතන පොඩි correction එකක් කරන්න ඕනේ. year 1 කියලා තිබ්බොත් ආපහු year 0 වලට 15 million add වෙනවා. ඒ නිසා අපි year 2 to 10 කියලා correct කරගමු. හරිද? beginning of each year from year 2 to 10. Because if we say it as year 1, then again here additionally we need to put 15 million for year 0. No, that is not rational because already we put 80 million as initial one. Therefore, let's correct it as year 2 to 10. Then a body correction year 2 to 10. Then if we say it as a year 2 to 10, then basically that 15 million increment, it will start in from year 2, but beginning of the year 2, therefore, we need to put it as a cash outflow of which year? Cash outflow of which year? Then if it is a beginning of year 2, we need to put it as a cash outflow of year 1. That's the important thing, okay? So, year 1. Basically, year 1 we can put it as a 15, then for year 2 15, year 3 15, 4 15, 5 15, 6 15, 7 15, 8 15, 9 15. Then can we put for 10th year, can we put cash working capital increment or the additional working capital requirement for the 10th year? Then as per given information from year 2 to 10, year 2 to 10. Then for the year second year, we put it as a cash outflow first year. Then for the 10th year, one, we need to put it as a cash outflow of which year? 9th year. Therefore, then for the 10th year, we can't put any additional working capital requirement. Therefore, it is 0. Then for the year 11, we don't have any cash outflow. I hope it is clear for all of you. Then basically, අපි cash flows දාද්දී ඕක වැදගත්. හරිද? Cash flows දාද්දී you have to think about that. මොකද beginning of the each year කියලා කිව්වොත් then we need to put it as a cash outflow of the previous year cash outflow. Then for this one also we need to apply that rule, that logic. Like that we can put the additional working capital requirement, and also then we can fully recover at the end of the year 12. Then whatever that we invested for the working capital, we can what? We can recover at the year 12th. Up year 12th okay, then we can recover. Then basically here total of our working capital investment we can get 1, 2, 3, 4, 5, 6, 7, 8, 9, 15 into 9. Basically we can get 15 into 9, it is 135 plus 80, then 215. Then we can put total recovered amount as at end of the 12th year as 215. How much we can put as recovery? We can put it as 250. Okay, that's about the working capital. Sorry, not minus, it is plus. Because it is recovery now. Yes, it is plus, not minus. At the starting point, as I told you, then for this management accounting, this is strategic finance and management accounting subject. This is the last level of your syllabus. There may be some questions from your already learned points as well. Then basically your examiner may not ask the NPV calculation. Actually for this paper, I included NPV calculation for the purpose of discussing some important theory related points, but for your examination, your examiner may not ask the NPV, but may ask some already learned concept from previous levels. You can't say syllabus එක නැතිනම් දේව අහන්න බෑ කියලා. මොකද වයින් final level එකේ then here you have to think as a CF4 level එකට ආවම ඔයාලට කියන්න බෑනේ. ඒවා CF4 පුටුවට ගිහින් ඉන්නවා. කවුරු හරි වෙලම කරේ ආවම අනේ ඒක මගේ CF4 නෙවෙයි, ඒක මගේ මේ මැනේජර් level එකේ තියෙන එක. දැන් මේක මෙහෙමනේ. දැන් අපි business level එක ගත්තොත් accountant. ඊළඟට corporate level එක කියන්නේ corporate accountant කියන්නේ like manager position, ඒ වගේ assistant manager position. ඒතකොට strategic level එක කියන්නේ CF4 level එක. එතකොට CF4 ට කියන්න බෑනේ මේක manager දැනගන්න ඕන, manager දන්නේ මම දන්නේ නැහැ. නැත්නම් මගේ එකේ scope එකේ නෙමෙයි තියෙන්නේ. එහෙම කියන්න බෑනේ. මොකද CF4 කියන්නේ සේරම දැනගන්න ඕන. ඒ නිසා syllabus එකේ නැති සමහර හැබැයි ඔයාලා already ඉගෙන ගත්ත points අහන්න පුළුවන්. maybe මොකද එහෙම අහන්න පුළුවන් කියලා කියන්නේ කර එක්සැමිනට අහන්න කියන්නේ සිලබස් එකක් තියෙනවා. අපි සිලබස් ගයිඩ්ලයින් එක ඇතුලේ යන්න ඕනේ. හැබැයි maybe මම කියන්නේ තියෙන්න පුළුවන් based on the examiner, because I don't know the perspective of the thinking pen of the examiner. Based on the examiner it may be deeper. He may ask ඔයාට කියන්න බෑනේ සිලබස් එකේ නැහැ කියලා. හැබැයි ඔයාලා ඉගෙනගෙන තියෙන concept එකක්. Then for this one I included to discuss some few concepts. That's a reason why I included NPV calculation for this paper. Okay, then let's continue. Then here we need to put the operating cash flows. Then for the year 1 to 8 we have operating cash flows. Operating cash flows year 1 to 8, 117.5, 120.5, 130.6, 137.7, 141.4, 148, 154.6, 156.9. Then from 8 years onwards we need to calculate the cash flows, but thing is, as we previously calculated, we need to get the nominal growth rate. Then basically here we have the real growth rate as 5% and the inflation is 6%. Then thing is we need to the nominal growth rate. Then as we calculated, it is 11.3. Okay, then using that using the Fisher formula, then basically we can get the nominal growth rate. Then here basically our real rate it is 5% and the inflation is 6%. Then basically we can get the nominal growth rate 1 plus real growth rate into 1 plus inflation minus 1. Then using this Fisher formula, then basically we can get the nominal growth rate. Then as we calculated, it is 11.3. No, then basically real growth rate is 1. Real growth rate is 5. No, then expected to go 5%. It's mentioned as a 5%. Then 5% into 1 plus inflation of 6% minus 1. Then if we resolve this one, then we can get it as 11.3. Then basically we can get nominal growth rate as 11.3. Then we can use that 11.3 for the purpose of getting nominal cash flows from year 9 to 12. Then if we multiply our operating cash flows of year 8 by 11.3, then we can get the what? Then we can get the then we can get the nominal cash flows for each year. Then for 9th year we can get it as 174 point. Then since here we have information for 1 decimal, then let's put it for the 1 decimal 174.6. Then for the 10th year, then we can multiply it by again, then no, we can add 11.3%, then 1944. Then for 11th year we can get it as 616.3, and for the 12th year we can get it as 240.8. Like that we can get the operating cash flows for each year, then basically based on the nominal growth rate. Then here we need to adjust the income tax or the income tax payment as well, because we need to get the after tax cash flows. Then basically incorporating income tax is levied at 30% and payable in the same year. Then they are planning to payable in the same year. Therefore, same year cash flows we can put as a same year cash outflow for this question. For this one we can pay, we can put as the same year cash outflow. Then basically we can get 30% as the income tax for each year. Let's get it for 1 decimal. Then we can get income tax, as all of you know, then it's a simple calculation. Then quickly we can do 35.3, 37.4, 39.2. Then all of these are cash outflows. Then for the 4th year 41.3, 42.4. Then for the 6th year 44.4, 46.4, 44.4, 46.4, 47.1, 52.4, 58.3, 64.9, and finally 72.2. Then like that we can put the income tax. Now we can get the net cash flows or the net cash flows for each year, because we have put all cash flows regarding this investment, whatever the cash flows regarding for that one. Then we can put the net cash flows, or then we can get the net cash flows for each year. Then here 480. Then for the first year we can get net cash flows as then for 1 decimal 67.3, 67.3, 72.2, 76.4, 81.4, 84, 88.6, 93.2, 94.8, and 107.2. And for 10th year sorry, not 107 point, sorry, 94.8, then for the 9th year 100, yes. Then here for the 10th year 136.1, 136.1. Then for 11th year 151.4, and for the 12th year net cash flows we can get as 393.6, 393.6. Then we can get the present value of each year cash flow. Then present value of each year cash flow based on what? Then for residual value, yes, we can include tax for that as well. Yes, with considering that 100% for that amount, considering tax, we can include tax for that as well. Then yes, okay, then let's include the tax for that as well. Yes, logically we need to include. Then for that as well we need to add additional 3, 3 here we need to add, that means 75. Again this become 390.6. Then I think important thing is here what? Deciding the discount rate. Then as we discuss, for this one it is more better to use what? It is more better to use what? Which discount rate? 7.50, company WACC or project WACC? Then here, then for this example actually simplified my calculation. Yes, then for taxation purpose we can consider the income tax based on that without getting the 30%. Yes, basically for the income tax, yes, based on the normal income tax calculation process, basically then without deducting yes, without getting 30%, I think 107.5 into 35.25, no? Then basically without getting 30% from the operating cash flows, yes, that is a logical way. That means considering the capital allowances, we can do, but I think here we don't have information for the capital allowances, no? Then basically it's a machine years, it is 5 years, but the residual useful lifetime is 12 years. We can do like that. Yeah, that is a more logical because that's a practical way, no? Yes, but for my easiness, for the calculation easiness purpose, here I use the 30%. Yes, that is a more logical way to get the income tax based on the capital allowance. That means basically, then here we need to assume that this has operating cash flows, no? Then, yeah, no. Then, since it is mentioned as operating cash flows, we can assume that this is without depreciation, but thing is useful lifetime of this machine or the QC, it is 12 years, but capital allowance only we can claim up to 5 years. Therefore, there may be, yes, there may be some difference between the income tax expenses if we calculate it based on that perspective. Yes, that's a more logical way, but for my explanation purpose here I got it as 30% from the operating cash flows. Yes, then for the WACC or the discounting factor, as I previously discussed, we can use both. Either we can use that 7.5 because it is a project specific financing method, it is 7.5, therefore we can use the 7.5. Then based on that we can get the present value because it is 100, since we 100% finance this project by this IFC loan. Or otherwise, as I explained, more logical way is to use what? Project WACC. The main reason why I told like that is what? The main reason why I told is that using usage of that project WACC for the purpose of discounting these cash flows is what? I explain kara. What the reason is? More logical or the more suitable then. Theoretically we know, if we know the project is specific cost of that fund, then we can use that for the purpose of discounting that cash flows. But as I explained, for this example, that QC, the investment is for the QC and these are directly in their operational plan, then considering the operational risks, then we need to get that risk into our calculation. Then if we use the 7.5 of that IFC loan, then it is only captured that loan related risks or that IFC related risks, but it is not captured the operational risks. Then to capture the operational risks, then we need to use the what? Project WACC. Project WACC, then basically project WACC we can get, how can we get? Using the CAPM we can get the company cost of equity, because here we don't have any cost of equity information for this project because it is 100% financed from the debt. But to get that operational risk into our calculation, here we need to use the cost of equity. You can explain, you can elaborate about, you can further justify that. Then cost of equity is the CAPM. Basically cost of equity risk-free rate plus beta into risk of market minus risk-free rate. Then basically risk-free rate for this example it is a 10%. Then for this one beta it is 8. Current levered equity beta it is 80 into, then here risk premium is 6%. Then basically using this we can get what? We can get the cost of equity, then 6% into 80% is 4.8 plus 10, then we can get it as 14.8. Then basically cost of equity we can get as a 14.8, and also cost of debt. Then here we have company currently existing pre-tax cost of debt as 9.5, but it is for the existing debt, but for this project we can get less than that from IFC, then we can get it at 7.5, less than that 9.5. Therefore, for the cost of debt we need to use 7.5. Then we need to calculate it based on what? We need to calculate it based on 7.5. Then after tax cost of debt we can get into 1 minus tax. Then basically 7.5 we can multiply by 70%, then we can get it as 5.25. That's the cost of debt. Then we need to get the WACC now. Then important thing is getting WACC. මෙතන පොඩි hidden දෙයක් තියෙනවා. හරිද? දැන් WACC එක ගන්නකොට then based on given information market value of the equity 8,400 for the existing equity. Then based on the available information, then for the NTP we don't have any upcoming or the then expecting share issue anything. Therefore, we can assume this as this for the this 8,400 as the future expected equity as well. Then for the debt, existing debt is how much? 1,600, but this is existing. Then if we go with this project, we are planning to borrow additional 400. That means our expected debt would be 2,000 either. That then here I am, then for the WACC calculation I am getting that change capital structure, but yes, it is more logical. Then we can geared and ungeared this, and we can adjust the beta based on their expected capital structures. Yes, your point is correct. We can do like that. Actually, then here I use the given equity beta of 0.8, but this one is based on this capital structure. That means 84 to 16. But after we will get this loan, what happened to our capital structure? It is changed now. Then basically loan, it is become as 2,000 and equity. Let's assume it has a remain not change කියලා 8,400 කියලා ගත්තොත් එතන අපේ ගන්න පුළුවන් percentage එක 8,400 divided by 10,400, then it is approximately 81%. 81 to මෙයා වෙනවා 19. So our capital structure ke change වෙනවානේ. Then here we can expect the change of the capital structure. Then based on that, yes, we can ungeared and geared this based on the change capital structure. I think there may be not some considerable change in that, but we can do like that, and then we can get what? We can get beta based on the change capital structure. You can do like that. අපි එහෙම කරොත් then you can do that calculation, and then you can get the beta, and then you can amend this cost of equity. You can use that way as well. Yes. Then to get the WACC as well, you need to consider this what? New or the expected capital structure, because as we are planning to get this 400 loan, then what happened with that? Then our debt becomes 2,000. Therefore, to get the WACC, we need to consider this change capital structure. Then as well as Vinojan said, yes, it is more rational to change this equity beta as well. ඒ විදිහට අත මේක. That is a good point. ඒ විදිහට හිතන එකත් ඇත්තටම හොඳ අවල්. හරිද? Yeah, that's a good point. Then based on that, you can get the WACC. Then first thing is, one thing is you can do is you can change this based on the change capital structure, and also you need to calculate WACC based on what? Based on the change capital structure. Okay, then for the requirement, actually you can get the NPV, and then you can calculate. Then most important thing is about this discounting factor for this NPV. Then as I told you, then you can use 7.5. That is okay, but to get the operational risk, to incorporate the operational risk, here we need to calculate the cost of WACC. Basically, we need to get the cost of equity and cost of debt. Based on that, we need to get the WACC. Then for the cost of equity, we can calculate it based on the CAPM model. But since we will get the loan, then there will be change to our capital structure. Therefore, we can calculate the revised beta, ungeared this, and again geared based on the existing, and then you can get the CAPM or the cost of capital. Then for the cost of debt, we need to get it based on 7.5 because for this project we can get loan at this rate, not 9.5. The existing one is 9.5, that's okay, but for this loan we can get it as 7.5, therefore we need to consider that as well. And to get the WACC, you need to consider the revised or the expected capital structure. Then that's about the requirement D. Then you can do calculation, and then ultimately you can then PV. For new WACC, don't we need to use previous KD cost related 4,600? No, then for WACC here, basically we need to get based on the considering full debt of the company, because if we use the 400, then what happened for the ultimately cost of debt? මොකද අපි assume කරනවා අර 1600 to 7.5 වලට ගන්න පුළුවන් කියලා. හරිද? ඒ නිසා තමයි අපි consider කරන්නේ. මොකද more logical is to go with considering that base, not only considering the 400. Okay, then with that we can complete the, not complete, you can do the further calculation regarding requirement D. It's a simple thing. Yes, as I told you, there will be another session to discuss the question 2, 3 and 4. Then before conclude the today's session, can you just give the small feedback about the today's session? Then if there is anything to need to improve, then you can tell that about as well. Then we can improve that in our Tuesday session as well. Then before conclude the session, give small feedback using the webinar chat. Then you can use the webinar chat, and then you can give small feedback about today's session as well as this discussion. Okay, let's meet in this Tuesday. Then CA Institute, they will send separate link and the email regarding that one, regarding that session. It may be team session, MS team session. Then for the 12th year, then basically operating cash flows plus for the residual value I go to 30%. And also if you need any further clarification about those things, you can reach out me through WhatsApp using this number, only using WhatsApp, okay, don't. If you need any further clarification regarding anything, you can put WhatsApp message regarding this strategic finance and management accounting subject, then I will reply. Then if I will not reply within like 48 hours, then again resend that message. Then if you need any further clarification or anything, please ask before conclude the session, and you can put your feedback as well into the chat box. Okay, then good night, and let's meet this Tuesday. Then if you will not try question number, if you still did not try question number 2, 3, 4, then you can try those as well. Then for the question number 2 and 3, then these are like based on the decision making things. Then here you don't have any calculation but based on that you have to take some kind of the evaluation and the decision making related things. Yes. Okay, let's meet in this Tuesday. Bye. Good night.